And that network has so much value, and we can determine the fair value of any network, whether it's Amazon, right, which is just a search engine to match buyers and sellers, or the Apple network of all the billions and billions of connected devices, or a television network. Networks are easy to value according to something called Metcalfe's law. And so we can come up with a fair value of Bitcoin today of somewhere around $95,000 per Bitcoin. Now, well, if the price is 83, then why isn't it 95? Well, again, people disagree about value. And in the last couple of weeks, we went from, above fair value at 103 down to 83. Well, why? Well, a couple things happened. One,
Mark Yusko highlights the importance of Bitcoin as a hedge against the unrelenting devaluation of fiat money. He highlights that, similar to how an ounce of gold is always an ounce of gold, Bitcoin's basic value is unaffected by price fluctuations. People are essentially trapped in a cycle of financial degradation as long as central banks continue to generate money, since fiat earnings and savings lose purchasing value. According to Yusko, owning Bitcoin is a means of escaping this system, protecting wealth, and ensuring financial independence in addition to being an investment. Take a moment to like this video, subscribe to the channel, and turn on notifications for more content on Bitcoin and the digital asset space. Also, drop your thoughts in the comments below. It helps with the YouTube algorithm and supports the channel. Thanks, and enjoy the video.
If you work for a fiat salary, you are a slave, because that money can be stolen back from you through devaluation of the currency. If you take that fiat and you put it into Bitcoin, you are free. Because now, every time they devalue the currency, your value goes up. It's pretty interesting. So what that does is it breaks the shackles of being a slave, and now you have more time to be creative, to be innovative. Now, you may choose to be a leisure person, that's fine, but it gives you the opportunity, if you so choose, to unleash human potential. And so I think the acceleration of great stuff because of Bitcoin and because of digital world is just going to be extraordinary. Think of Bitcoin, again, like gold, as the ultimate savings technology. So when do you spend your savings? Well, when you have a big expense, like you send your kids to college, you retire, you need a little money for living. So if you take a mindset that Bitcoin is a better savings asset, like, here's an example. Let's say I take the money that I get paid in fiat and I deposit some in the savings account. But here's the problem. Every day that I leave it in fiat, the government is taking a little bit of it away through this thing called inflation that they've told us for 100 years is good for us, which is not true. I mean, think about it. Over a 30-year period, I lose half my purchasing power at a 2% rate. How is that good for me? That's not good for me. And the issue of fiat versus gold versus, like, here's an interesting stat. So, gold today is like $2,900. Not that long ago, like less than 20 years ago, it was $200 an ounce. Well, what's the difference? It's still an ounce of gold. It's still a single ounce of gold. Well, it has the same purchasing power because the currency has been devalued, like that 100 trillion Zimbabwe dollar bill. So the same thing is true of Bitcoin. If I transition that savings from fiat to Bitcoin, now I'm in an asset that never changes. Like, a dollar is always a dollar, but it doesn't buy, quote unquote, a dollar's worth of goods because there's more dollars, right? So if you think in gold, an ounce of gold used to be $200, now is $2,900. It's not that the gold changed. 1 ounce is still 1 ounce. The money got worse. Like, according to Zillow, my house here in Chapel Hill went up 50% in the last 2 years. My house did not grow. It did not get more efficient. It actually wore out a little bit. I had to put some money into it to fix it. So no, the money got worse. And it's the same thing true if you look at stocks. Up until the last couple of weeks, they were at all-time highs, right? Well, only if you priced them in dollars. if you price them in gold, US stocks are the same price as 1996. What? It's because we've been devaluing the currency. So one Bitcoin is one Bitcoin. Bitcoin doesn't change.
Bitcoin's decline from $113,000 to $83,000 and other recent market volatility are caused by short-term trade dynamics rather than a fundamental shift in value. Institutional tactics utilizing Bitcoin futures have a significant impact on these price fluctuations. Large financial organizations were able to manipulate Bitcoin's price through derivatives when it was categorized as a commodity rather than a security. Elites have benefited from similar strategies to keep the appearance of stability in fiat currencies while suppressing gold prices. Don't forget to subscribe and hit the bell icon to stay updated on our latest videos. We'd love to hear your thoughts in the comments. Now let's dive back into the interview.
I can actually see a world where there is only one money, that is Bitcoin. Now that's a long way off, and the governments are going to fight like crazy to stop that, because government's power comes from these paper currencies backed by threat of violence. Pretty good deal for them and for the few politicians that make money off it, like from Zimbabwe. The politicians got super wealthy as they were devaluing that currency. Same thing in Argentina, same thing in Venezuela. The people at the tippy top of the pyramid make all the money in currency devaluations, which is why Bitcoin protects the rest of us from that kleptocracy. Every day between then and now, the price has been volatile. And yet, I don't think about the price at all, this is the long-winded way of saying the reason price doesn't matter. What matters is owning a piece of the most valuable computing network the world has ever seen. The Bitcoin blockchain, the network, all the tens of thousands of nodes that secure the network, is the most powerful computing network by 1500 times, 1,500 times, not 1,500%, 1,500 times more computing power than the CERN supercomputer, which is pretty powerful. And that network has so much value, and we can determine the fair value of any network, whether it's Amazon, right, which is just a search engine to match buyers and sellers, or the Apple network of all the billions and billions of connected devices, or a television network. Networks are easy to value according to something called Metcalfe's law. And so we can come up with a fair value of Bitcoin today of somewhere around $95,000 per Bitcoin. Now, well, if the price is 83, then why isn't it 95? Well, again, people disagree about value. And in the last couple weeks, we went from, above fair value at 103 down to 83. Well, why? Well, a couple things happened. One, there was a big unwind of a arbitrage that's been going on since the advent of Bitcoin futures. Now, so this is a long, complicated thing, but everyone was cheering really loudly when Bitcoin was deemed not a security, right? It was made a commodity. Oh, that's great, that's great. Well, be careful what you ask for. You might get it. Well, why is that bad? I will argue it was intentionally not classified as security, which would probably be better. It was classified a commodity because when you have a commodity, you can issue futures against that commodity, which allows very large, powerful institutions to basically control the price. Let's talk about gold, right? Gold prices, if you look at money supply relative to what gold should be, there are people like Chris Wood and others who say it should be $5,000, $6,000. Well, why is it only $3,000? You're always losing money. It's like, why am I always losing money? Price of the commodity is up. Well, it's because of this thing called the roll yield. Well, think about this. Let's say the price difference between the future and the spot is 12%. I could sell the future. I could buy the spot or the ETF where the spot is, and I could make 12% with no risk. Seems like a good deal. And then if I levered that, if I'm a really big institution like a bank or a big asset manager, I could lever that up. So when the ETFs were approved, a little while ago, a year ago, everyone was cheering. Well, I was looking at the same day, not a coincidence, a whole bunch of futures contracts were also approved by the CME, Chicago Mercantile Exchange. Like, well, wait, what's going to happen is all these big guys are going to buy a bunch of the ETF, but they're going to short the future against it, and that's going to cap the price. This is exactly what happened. And then the price did start to rise as people got excited about the halving and because after the halving happens, the fair value rises because there are fewer block rewards, so people aren't going to sell unless they get a higher price. Long story short, is what happened a couple weeks ago was that spread between the futures price and the spot price fell to 5 or 6%. Interest rates had gone from 0 to 5%. So now the cost of funding of that arbitrage trade, it's not worth it. So people unwound. And so there was a outflow from the ETFs and people freaked out. The bid-ask spread got super wide and the price fell. But that's a temporary phenomenon because I used to love, when the 13Fs would come out and people would say, hey, look, Millennium has this big position, $2 billion of Bitcoin. I'm like, no, they don't. Yes, they are long 2 billion, but they're short at least 2 billion, maybe a little more on the other side in the futures market. Now they've unwound that. So now it's more about traditional supply and demand dynamics. And my guess is we'll, resume the uptrend after we get through this trade war nonsense that we're going through today.
Mark Yusko highlights that Metcalfe's law, which states that a network's worth is proportionate to the square of its connected users, can be used to determine the value of Bitcoin, just like it can for any other network. He therefore calculates that the fair value of Bitcoin is approximately $95,000. However, short-term market dynamics, particularly institutional trading methods employing futures contracts, are to blame for the present price volatility, which include Bitcoin's recent decline to $83,000 rather than reflecting its actual value. Yusko says that institutions were able to offer futures contracts, which they employ to manipulate prices, since Bitcoin was classified as a commodity rather than a security. Bitcoin is subject to price limitations as a result of institutions shorting futures against spot ETF purchases, much like gold prices have been restrained by futures market processes. These bets were unwound because the arbitrage method, which had previously produced 12% returns with no risk, lost appeal when interest rates increased. The recent decline in the price of Bitcoin was brought on by panic-driven selling and ETF withdrawals, but Yusko thinks this is just a short-term hiccup. He anticipates that Bitcoin's upward trend will restart when the pressure from futures eases and is replaced by more conventional supply and demand factors. The fair value of Bitcoin is anticipated to climb as the post-halving period goes on and scarcity grows, enhancing its long-term potential as a store of value. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.